Eight. Hello, y'all. Hello, hello, hello. It is Financially Lit Tuesday. Back at it again. So this Saturday is the Wealth Up event. We're going to be going over inventory management. We're going to be going over bookkeeping, tax loopholes. So you definitely want to make sure you're in the building. Hello, Vision Sound Jacks. So you definitely want to make sure you're over at One Bridge because we're going to go over like how to properly manage your inventory, how to do the basics of bookkeeping on your own, and also how to make sure that you're taking advantage of these tax loopholes. So, hey, Preston. So, definitely make sure that you're in the building on Saturday. So, for tonight, I will be giving like a little appetizer to Saturday. I can't give y'all all the goodies, but I'll give you a little something, something. Hello, hi, Nicole makes moves. So I'll give you a little appetizer for what to expect on Saturday. So definitely we're going to be going over a lot of information. It's 3 hours long. There'll be breaks in between every hour just to kind of woosah in the midst of receiving all that great information. But it is going to be amazing, and it's going to be over at the Regency Mall, and it's going to be at 12 o'clock till 3. So just a little portion of your day to make sure that you're set up for success in the new year. And the tickets are online at Grand Financial /wealth up. You can find the link in the bio if you're on Instagram. And then if you're on Facebook, you can find it in the caption. So, for starters, y'all. Oh yeah, I did bring my water because I get so dehydrated when I'm talking so long. So yeah, for starters, we're gonna go ahead and start with like a little bit about bookkeeping, right? So why is it important? Why book? Why record keeping? Why am I as an accountant so important, so vital to businesses, right? Why are the financials so important? So the books, there's so many reasons. So the books basically tell the financial history of the company. It tells the entire history of the company in a sense, right? So it tells you what you're spending your cost on. So what is the cost? What are your If you're a product based company, what is your product cost? What is your overhead? What are you spending, right? And then it tells you what products are working because now you're receiving revenues from different clienteles. So you know what products are working, you know what services are popping, what services are in demand because those are the services that are being highly requested by your clients, right? By your customers. So now you know where to move in your company. So when you are having proper but when you are doing proper bookkeeping, you're able to tell these things, right? You're able to say, hey, I know this product is not working, or hey, um how about we introduce this because they like this product so much or they like this service so much that maybe we should introduce this. What does that look like if we introduce a product like that? What does the numbers behind it look like? Okay, over the course of a month, over the course of 90 days, we're going to find out how this does. We're going to find out how much it is costing us to actually do this. Like, is it running us in the hole? Exactly all that. So, that is one of the big points of making sure that your books are kept regularly, right? Because we want to make sure that we're scaling our business for success. We want to make sure that we are profitable. You're in business to make a profit. Yes, our mission, all businesses have different missions. Our mission is to serve, right? But you're in business to make a profit because if you weren't, you wouldn't be in business anymore, right? So definitely make sure that you're in business long enough to see tomorrow, long enough to see 5, 10 years along the line if that's your goal. So definitely making sure that proper internal controls and bookkeeping is put in place. Like companies that don't have proper bookkeeping measures, I can guarantee you your costs, your product costs is ridiculous. Your costs are probably ridiculous. Your expenses are all over the place. Poor record keeping leads to this. So it's same thing when on a personal side, when you don't have a budget and your money is doing whatever the heck it wants. That's what happens when you don't have the proper bookkeeping protocols put in place. Your money is doing whatever it wants, and now it's on a bigger scale. Thank you, Trey. Now it's on a bigger scale because you're dealing with larger amounts of money most of the time, and now you're dealing with depending on what business you're in, what type of business that you're in, you're dealing with other people's money as well. So definitely making sure that you're putting in place the proper protocols, you're putting in place the proper bookkeeping. So for starters, the basics of bookkeeping is when you start bookkeeping, you're essentially classifying your expenses and revenues in the right accounts, your assets as well, your assets, your liabilities, your expenses, your revenues in the proper accounts. So in accounting, we learned that assets, the beautiful accounting equation, assets equals liabilities plus owner's equity or own equity, right? So when you're looking at a balance sheet shows you the assets, liabilities, and equities of the company. And when you're looking at that, the numbers balance at the end, right? So they equal each other. Assets equal liabilities plus the equity. And then when you're looking at your other income statement, your profit and loss, also known as an income statement, you're also seeing that. All right, y'all. My eyes be water. I have to leave these on now because I stare at the screen so long that I have to have these blue light blockers on. My eyes hurt. So your income statement is gonna put your revenues or your sales against your expenses. So your revenue is gonna bring your after your variable cost is going to bring you your gross profit. Your gross profit is going to say, hey, my inventory is costing me this relative to my sales. And then you're going to have your fixed cost or your other variable cost at after that, which is your regular operating cost. Your operating cost is going to say, okay, my overhead is ridiculous. Maybe your payroll is insane, or maybe other areas of the business not necessarily associated with the product. So not everyone has that product cost, that gross margin, in a sense, that variable cost associated with the product, and because that's only for product-based companies. But really making sure that you know the difference between those things, because even if you are a product-based company, whether or not you actually know, hey, what my product cost is and what it looks like on an income statement, what it looks like on a profit and loss statement, what all is included in operating costs? Great question, Preston. So all that's included in operating costs is really your your cost, and I'm gonna put it in like pretty like simpler terms, right? The cost to operate your business, meaning if you're in a brick and mortar and you're paying rent, that is an overhead cost. That's a operating cost. So if your payroll is an operating cost, your lights, I'm gonna just group that in utilities, your uh, maybe vehicle expenses, meals and entertainment, all those are operating costs. Everything that is all the other necessary expenses for your business. Customer acquisition cost. Are you asking me where that falls on the income statement or balance? I mean, profit and loss? Hey, Brianna. Hey, y'all. Hello, hello, hello. That's operating. Yes. So the exactly. So usually people will put that into advertising and marketing or even PR. So when you're building out these statements, these income statements, or even balance sheets, right? Your financial statements, you can get as specific as possible. Like you can say, I want an account that's specifically for customer acquisition is pretty broad because it can entail different aspects. So if you're saying like, hey, I'm gonna have an account for email marketing, or maybe I want to have an account for just telephone expenses. I want to have an account for employee appreciation. I want to have an account for sponsorships and charity. And I say customer acquisition costs can be broad because sometimes it can go into T&E. So it can go into meals and entertainment sometimes because those are sometimes you're treating the client or the potential customer to lunch, or you're treating them to a vacation, or what, or not a vacation, not a full vacation, that's probably a little much, but maybe some kind of gift, some kind of, hey, here's this, and potentially you can be a client. So yes, there's usually like a different categories that can fall under as far as customer acquisition, because there's so many different ways that you can go about acquiring a client or a customer. But yes, so as far as like building out your financial statements, I recommend being specific as possible. When you're starting out, definitely you don't have to do the most as far as making an account for every little thing. You can do that as you continue to grow. You can always add accounts in there. But really, the basics to bookkeeping is classification. So, yes, my job deals, my profession, I should say, deals a lot with numbers because I'm looking at numbers all day, but a lot of it when it comes to bookkeeping deals with classification, making sure the money is going in the right place. And that is the bulk of bookkeeping, making sure the money is showing up in the right place, so that when I pull up my financial statements, when somebody else, a potential investor, whatever the case may be, is looking at my books, they know this is for this, I spend money on this, or whatever the case may be, so that they can choose whether or not to invest in that company or acquire that company, however they want to go about doing business with that company. Any questions on bookkeeping? Because bookkeeping is so exciting, y'all. And then yes, so on Saturday, like I said at the beginning of the live, this Saturday at 12 at noon, 12 o'clock, we'll be doing the Wealth Up event at One Bridge Regency Mall. And that's just $45 to attend the event. It's 3 hours long. There will be breaks in between. Don't worry, you're not sitting in a chair for 3 hours. There definitely will be breaks to woosah and everything, but we'll be going over that bookkeeping, like more in depth about bookkeeping, inventory management, how to properly manage inventory, because there's way too many. It's so easy to mismanage inventory. It really is. And then next thing you know, it's costing you more to produce a product than you're actually getting paid for the product. Or you're losing track of inventory and you're losing orders. Like it's so like when product based companies is really it gets really crazy, because usually service based companies have a higher profit margin because they buy a software and they're able to do the work. It's normally based on labor. I mean, it is based on labor versus based on a product. So it's a lot easier to lose money with product based companies. So that is the. Now we'll definitely be going over the inventory management on Saturday. So if you know any product based companies, let them know. Hey, on definitely go check out this workshop on this Saturday. Another thing we're going to be going over is the tax loopholes. So we're only going over five because honestly, there's hundreds of tax loopholes, but these five are extremely common. You will leave Saturday with a tax checklist on the different things that you can write off as a business owner on your tax return, and with five loopholes that you can possibly take advantage of. So yeah, this is definitely excited. I'm excited. I'm like, ooh. But okay. So for inventory management, uh, And this is for my product people with product, and I said it before. When you're dealing with products, it is really easy to lose money because you buy something from a vendor and you buy it for $3. You go and you sell it for $10 because you're like, yeah, I got it for $3. I'm making $7, right? And that's wrong because a lot of product based companies do that. They buy something for $3, they offer it, go sell it for 10 without looking at the other costs because they didn't look at the other operating costs. They still got to keep their lights on. They still have to account for labor hours. How long did it take them to get that product ready for the customer, right? And then they also have to take into account, hey, once I get it out to the customer, did I have to send out something else? Did I have did I have other office supplies that I needed? The labeling on the packaging, all that is more cost. So at the end of the day, it ends up costing them uh, $8 for that one product, right? And they're selling it for $10. So then they make $2, and then now they go to pay themselves, and they're like, "Shoot, how can I pay myself? I don't know how to pay myself because I'm only profiting $1 or two off each product I sell, but I thought I was making $7 off the product. I don't understand what's going on." And they run themselves into the hole. Can you buy insurance for a lost product? You can. You definitely can buy insurance on your products. Um, you definitely is yes, absolutely can. So, and a lot of like retail companies, people with brick and mortars, they do that because especially during the holidays, stuff is high. So right now we're in the fourth quarter, and theft is like it's climbing up there because people are normally still around these times and things like that for for gifts and all that good stuff. Um, yes. Another thing about managing your knowing how to manage your inventory, right? So when you do have your product, so that's what making sure that you're pricing your product correctly. It is crucial that you're properly pricing your products because you have to take into account everything. And that's why managing your books are important. So when you go into business, say you're starting out a product-based business, right? The first thing you need to ask yourself is, what do I need in order to get started, right? What do I need? All right, I'm ready. I'm ready to go get my LLC. Yay. No, hold on. Pump your brakes. What do I need? So, do I need, maybe I'm doing it from my house. Now I'm burning electricity from my house. I have a station at my house that's dedicated to whatever I'm producing, right? So, cool. But now I'm putting, that's still costs associated with that product that you're not accounting for, right? But we'll get to that. But now you're like, okay, I could just do it from my house. Cool. All right. Now I'm making lotions and oils and stuff, right? So I can do that from my home. It'll be great. So I buy the material and I buy the lotion, the stuff to make the lotion. I buy it for $100 and I could make 100 lotions out of that. But then I have to buy the containers to put the lotion in, which I buy for 250, right? Okay, all right, cool. I have the containers, I have what's going in the containers. Now labeling. Properly labeling your company can make or break, or somebody saying, "Oh, I want to buy your product too." Ew, what is that? Like there's not even a name on it. Making sure that your stuff is properly like labeled is important because every time somebody has your product, they're like your name is on it, so they're not thinking, "Oh shoot, who did I get this from again?" Your name is on their product. And also, if you're like, "Oh my gosh, you have to try this oil that I got from," I don't even remember. Well, their name is on the product, right? So I do run into companies, small businesses all the time where they're not properly labeling their merchandise. And it's because yes, they're maybe starting out of their homes, they're starting small, but properly label because that can be a customer coming to you because they saw your name and they saw a lotion with your name on it. So now they're like, "Ooh, let me see what they're about." They go look you up. versus an empty bottle with some lotion on it that they got from a small business owner, and they're like, oh, okay, whatever, right? So properly labeling. So now you're like, all right, I'm properly labeled now. Okay, I have my product, I have my labels, I'm ready. I got my website, it's lit. I'm ready to go. Now, as you're moving inventory, you want to make sure that, hey, I started out with 50 products. I just made a new batch with 50. I write down 50, or I have an Excel spreadsheet, however you choose to track your thing. I recommend using a software like QuickBooks or whatever, because you can track your revenues and expenses through there as well as track your inventory. But say you're like, hey, I don't have the $50 a month to pay for QuickBooks right now, and you use an Excel sheet. Cool, right? So every time you do a new batch, I made 50. Now, every time an order goes out, you update that, right? Because you want to make sure that you're accounting for everything going out. Because now when you look back and you're like, wait, I have 30, but I only made $50 and I sold. I mean, I had 50. I only made $30 and I sell them for $10 each. Like, where did all my merchandise go? Well, you were picking up and you were saying, hey, try this, and hey, move this. And it's okay to have testers, but make sure you're documenting it, right? Because it's like you won't be able to see how profitable your business is without properly documenting. Same thing when it comes to bookkeeping, making sure you're tracking your books. You won't be able to really tell if you're profitable without making sure you're tracking that to the T. How do you write off promotional items versus product? So, write offs, yay! I love write offs. So, they you kind of write them off the same, uh, as far as like putting in the number and all that, right? So for promotional items, say they fall under advertising. When you're doing it on your taxes, so they fall under advertising. You put it in the advertising slot. You total it up. Of course, you have the receipts and everything associated with the expenses, and then you put in that number and make sure you total it out. Now, when you're doing product, um, I wish you can do like a board or something, because I really want to like draw and like kind of show it. But when you're doing a product, say you have a product for when you're writing off the product costs. Now it does take you through the steps of beginning inventory, plus or minus returns and purchases, and then labor costs, materials and supplies, ending inventory. So that's how. So it gets a little more detailed when you're going into product, right? Writing off your product, and it's not really a write off per se. It's just accounting for those expenses on your taxes, so that you're not paying taxes um, on those product costs. So, and I'm writing it down so I can make sure I'm following the steps and all that. So we have beginning inventory, and I'm giving you an example, right? So beginning inventory, say you started 2020 with 100 lotions, since I'm using lotion. So started 2020 with 100 lotions, and then you were like, I'm gonna buy. I bought throughout the year. I bought 500 lotions, right? But then, I mean, I bought $500 worth of lotions. I said 100. So beginning inventory, $100 worth of lotions. I bought throughout the years $500 more worth of lotions. But I also paid somebody $5,000 this year in labor costs, or I paid myself $5,000 this year in labor costs to make or put together the product. So that's associated with product costs. I also had I had $100 worth of returns throughout the year, because returns and discounts throughout the years. That's just what happened, right? And then I also had the supplies that I purchased, like the labeling, the labels, the bottles that is going in, uh, all that good stuff, right? So I also spend another $1,000 on all that. So at the end of it, my product cost is now rough number six, about $7,000. Now that $7,000 amount after all those associated costs is your product cost. So when you go into it, and it'll take you like through the steps as far as like when you're going to write off these product costs, but that's essentially how you would go. Now, your promotional items and advertising, that's not associated with the product, not directly. That's indirect. That's indirect costs. But your direct cost is basically what I just went over. And then your indirect cost is your advertising, your promotional items, your overhead, things like that. Uh, Hopefully that was helpful to you and answered your question. Hello, hello, everyone that's tuning in on Instagram and here on Facebook. Um, so I went over booking tax loopholes. So I'm just gonna give y'all one tax loophole today. So just one, because the other, I might even do like seven or eight loopholes on, or maybe 10 loopholes on Saturday. Because I'm just feeling like I need to give out more loopholes, tax loopholes, right? So I'll give y'all one today to walk away with, but definitely come out to the Wealth Up event this Saturday at 12 o'clock at One Bridge Regency Mall. The tickets can be purchased at grandwebfinancial.com/wealth up. So absolutely, that was great. Thank you, thank you. Cool, cool, cool. So loophole. Let me see. I'm opening my document right now. I should have had it open already because whenever I'm live trying to open documents, it's a little slow. Hello. Hello, hello, hello. Okay. Kind of went over business deductions. I am. Oh my gosh, it's running a little slow. Oh man, I wish I had this open already. Okay, so I'm gonna just go off the dome because this document is taking too long. So I have a document where I have a bunch of my loopholes that I normally look at, but from the dome I can go ahead and give y'all this one. So really, because majority of companies are LLCs, so when you do file your taxes, you're still taxed as a sole proprietor. So there's really only three tax types, right? Like when it comes to taxation, business taxation, there's your sole proprietor, which is grouped with LLCs and your contractors, right? They're grouped all in that bunch. And then you have your partnership. But when it comes to your partnership, not like your LLC partnership. So if it's an LLC partnership, it works the same as a sole proprietorship. The only thing that happens is when you do the partnership return, it divvies out the amount that will be taxed on the individual's tax return. And then you have your S corp, your S corp and your C corp. Your S corp and your C corp is another taxation types. So when you're dealing with self employment tax, things like that. So a lot of times, like your LLCs, they get hit with the self employment tax, and you're like, oh my gosh, like I made $5,000 this year. I mean, I made $50,000 this year with my business. This is great. But then you weren't paying any taxes on on any income tax on that business throughout the entire year. So what happens is at the end of the year, when you file your taxes, you're left with this huge bill on that $50,000 that you made in your business. And a portion of it, a good portion of it, is self employment tax because you're paying essentially the employer portion and the employee portion for yourself, being a sole proprietor. So definitely, like a way that that can be alleviated is registering for taxation as an S corp. So I say this, but usually when you're starting out, it does cost more to manage an S corp. Like as far as like, I mean, managing an S corp. So some people might be like, oh, I want to go ahead and do an S corp. Cool. And then when I hand them the bill for filing their stuff, they're like, oh, why is it so much? Because it's a corporation versus an LLC. So yes, it costs more, but there is also that tax break. So the tax works a lot different. Not a lot, but it works differently. So definitely like looking into maybe that option to alleviate some of that self-employment tax that sole proprietors, LLC, disregarded entities have to deal with. And yeah. Another one would be vehicle expense. So I'm gonna give y'all this one. This is on the house because I technically already gave y'all one with the S corp, but I'm gonna give y'all another one. So vehicle expense, writing off your vehicle, right? Y'all, y'all taxes about to be lit this year. Well, 2021 for this year. Because so when you're writing off your vehicle, you do want to make sure that, hey, you've been tracking your mileage, all that good stuff for the year. But usually, like when you're starting out your business, you're not doing that, like tracking like that, right? Like you did a poor job of tracking your expenses all year, and now you're like, shoot, how am I going to come up with the receipts for all this money I spent on my car or all the mileage? Right? Usually, your first couple of years in business, the IRS is not like a stickler, right? But you do want to make sure that you're getting on everything on track, like because if you're faced with an audit, then you really have to produce all those documents, right? But when you're writing off your vehicle expense, so definitely making sure that hey, you have your starting mileage for the year and your ending mileage for the year, and then approximating about how much you're going from place to place. So if your office or your place of business is say 10 miles from your home, doing a there and back every day. So calculating it that way. I know I started this year off with uh 10,000 miles and now I have 30,000. So throughout the year I spent 20,000 miles. I drove for 20,000 miles. That is huge because, and then you take the standard deduction for it. I mean, not the standard deduct, the standard rate for it. So if your expenses for your vehicle, which a lot of the times they're not more than the standard, if your vehicle expenses, maybe you had a huge repair on your car and you paid a lot in gas and your insurance is high and your interest on your car payments are ridiculous, so you can write those off. Um, but if it's not more than that standard, which a lot of times it's not, definitely take that standard because 20,000 miles on a, on a vehicle write off for business expense is like a huge amount. So you're gonna be like $9,000, $10,000 in just writing off that vehicle alone, and that it usually is a great write off. So definitely making sure you're tracking it. And an easy way that I track my mileage is through QuickBooks, right? They should pay me for all the advertising I do, right? So usually my clients, when they want to get onboarded onto QuickBooks, I onboard my clients onto QuickBooks. When we onboard on the QuickBooks, we show them how to do the basics with QuickBooks. So if you choose to say, "Hey, I'm not ready to have Grand Rev manage my books for me yet. I'm not there. Maybe I can't afford it just yet." We do still do the onboarding with you. So we teach you how to do the basics in QuickBooks, and then once you know the basics, you can kind of manage your books while you're starting out. But while you're starting out, you could literally have your on my phone, it's right there. You can literally have every time you're in your car, whatever, QuickBooks is tracking your miles. So when you go into your QuickBooks application, you can see all the trips that you made. So you're tracking your mileage throughout the year. So at the end of the year, if the IRS want to do an audit, you have your miles tracked. You have, and in your gas expenses, you take a picture of the receipt. Like, it really makes bookkeeping and tracking your books a lot easier. So definitely make sure that you're in a place to take advantage of that vehicle write off. If you are working from home, I mean, if you are a contractor or self-employed, and you are working from home, then making sure that you're taking that right out. See, another loophole. I need to stop talking because I'm about to give all the all the loopholes out. No, I'm gonna definitely have a lot more different ones. I'm probably gonna go over 10 more than 10 loopholes on Saturday, because there's just so many. But another thing, if you're working from home, if you're self-employed, a contractor, making sure that you're writing off the space in your home. I have an at-home office. I write off this space. Definitely making sure that you're taking advantage of those write-offs and those advantages. Any questions? I know I said a lot today. Ooh. If I wrap my car in advertising, can I write off the whole vehicle as an expense? Absolutely. You definitely can. The cost that it took to put the wrap on your car, the full cost of the car, the everything associated with the car, the insurance, the gas, the literally every single thing you could go ahead and write off on the car, about the car. hmm and then but as if you're using, so if your car wasn't wrapped and you were just using the car, as a business and personal expense, then you would just write off the business portion of what you're using. So you wouldn't write off the entire car, like you would a fully wrapped car, because that's a clear business car. Any other questions? These are good questions, Trey. Awesome. Hello, 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 Instagrammers. What has better tax advantages, LLC or S corp? Great question. It's gonna have to be the S corp. It's yeah. Um, there's quite a few reasons. Like when I say, like, starting out, it does get a little more complicated dealing with corporations versus LLCs, but they definitely have their advantages if you're ready to go to the S corp. But they do. It is a better advantage. And as far as like removing yourself completely from the business, as far as liabilities, reasons, S corp as well, because the S corp is a separate entity, separate from the owner. It files its own tax, does all that. So you don't have to worry about you getting caught up in business legalities. If the business gets sued, that don't mean you get sued. Versus the LLC, it does have like some like lesser damages, but you still can, if it's, especially if it's a self disregarded entity, if it gets sued, then they take that business and your assets. But yeah, so tax advantages, yes. Legal advantages, yes. As far as the S corp, it just costs more to manage, and they have more regulations to follow. Any other questions? Mm-mm-mm. That's it, y'all. Okay. Again, again, again. So this Saturday, like I said, December 5th at noon at One Bridge Regency Mall, we will be doing that Wealth Up workshop. I'll be running a little surprise promotion for tomorrow. So definitely, so I'll be running promos throughout the week, well, this week as well, but also leading up to Saturday. There will be some tips on our page and things like that to kind of look out on, uh, to be aware of, leading up to the event as well. So. Yeah, that's it for tonight. If you do have any questions outside of it, if you do need any financial services, CFO services, a strategy session, life insurance, definitely you can reach out to Grand Red Financial. You can book a consultation with us on our website, or you can give us a call, not right now. Give us a call during normal business hours, 9 to 5, and you can book with the assistant, and she'll go ahead and make sure that you're on the calendar. And yeah, see y'all on Saturday. Thank you for the great info. Thank you, thank you. Thank you for engaging as well. I appreciate it. But see y'all later. See you all next Tuesday. Next Tuesday is going to be brand new topic. Let me see. Next Tuesday is going to be the 6th, 7th, 8th, 9th, I believe. Oh, I could have just put 7 days on today, the 8th. But yes. So next Tuesday will be a brand new topic. I'm not too sure what we're going over, but it will be tax related because everything up until the new year will be tax related, just so I can make sure that everybody's, not paying all that money in taxes, right? And also, of course, Grand Mav is here to assist you with your tax needs, whether it's sales tax, payroll, reemployment, all the taxes. But have a great evening, y'all, and have a financially lit Tuesday.